There are growing concerns this morning over the potential impact the war between Israel and Hamas could have on oil and gas prices. The international benchmark Brent crude increased to more than $88 per barrel today, and that's more than $3 more than Friday's settlement price. Israeli and Palestinian territories are not major oil producers, but if the conflict spreads to other parts of the region, it could have a major impact on oil production and prices. So for more on this, I want to bring in Al Root. He is a senior writer for Barron's. Al, thanks for joining us. Will we likely see oil prices continue to rise as this conflict continues?
Well, I think you hit the nail on the head, Emery. It's a question of how it spreads, right? So Hamas, typically backed historically by Iran. Any third-party involvement in this conflict probably spells higher oil prices. And on the positive side, the lack of third-party involvement and not seeing a breakdown in what was becoming normalized Saudi-Israeli relations, that would probably mean lower oil prices. I think what you saw yesterday in the price action and then early today, and for the coming weeks, really, it's just the market trying to figure out what's most likely.
So how important, then, will Iran's involvement in the war be for oil supply and prices? Iran is an OPEC member. Mm-hmm. I mean, obviously they're under sanctions. So these groups of oil-producing countries, OPEC plus Russia, tend to act in unison. Saudi Arabia is obviously the most important producer, the largest producer. It also has the largest spare and swing capacity, so they have the ability to manage prices. So it's incredibly important, right? The things that have happened are horrifying, and it just really depends now how big this gets. It's obviously going to be very significant for Palestinians and Israelis. And then if you see other countries that have traditionally not aligned or aligned against Israel start to help out Hamas, then that spells longer, higher for longer in terms of oil prices, I'd say. So the price of oil today, though, is not the price of gas that we're seeing now. Give us an idea of what the connection would be. If the price of oil continues to go up, how immediate of an impact would sort of the regular person feel at the gas pump?
Well, it's not. Clearly not a time for jokes, but typically oil prices go up, gas stations raise it immediately. Oil prices go down, gas stations, as a good rule of thumb, $10 of oil is 30 to 40 cents at the pump, right? So you have that graphic up there, 368 national average. If oil gets into the $90, $95 range, that's going to be, 405 to 410 a gallon. So every few dollars is a couple more dimes at the pump for you and me.
And something else, too. The Israel-Hamas war is raising defense stocks as well. What more can you tell us about that?
So, well, it's an interesting question, right? Because it's always it's partly a knee-jerk reaction. That's not necessarily a bad thing, but unfortunately, conflict is good for their business. That's pretty much the only way to put that. It means more weapons, more munitions, all of the things that the Lockheed Martins, Northrops, even Boeing, General Dynamics, these are the names we all hear about. All the stuff they make becomes more in demand in times like this. Again, it's a question of, defense stocks are usually a function of things like, interest rates, what's going on with the U.S. defense budget, because most of these companies' revenue comes from our government. The shutdown was a big deal, and, deficits are a big deal. And then all of a sudden, something comes in like this to raise the awareness and the fear that global conflict is going to escalate. So you sort of have two ideas now, right? Are we sort of degenerating into a period of higher conflict and more uncertainty? That will support defense stock valuations, frankly. Is this sort of an isolated incident that will calm down quickly? Then you'll see defense stocks give back recent gains. That's not a lot of help, but if you want to follow Lockheed or Northrop and put it on your desktop and look at the stock price, you can use those as sort of an indicator of how investors think this is going to go. So yesterday,
they sort of freaked out, said, "Oh, I don't know what to do," and then maybe from here you can almost use them as a risk gauge.
Oh, that's interesting. Al Root, thank you very much.